Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. I'm speaking with John Kaiser. Welcome back to the show, John.
Jim, good to be back.
What was the mood like in Toronto at the Prospectors Development Conference, and how does it affect Discovery Watch juniors such as Colorado Resources, over which a proxy battle has developed?
Well, last week, I would say the mood at the PDAC was somewhat subdued. We did not have anything resembling a January effect, and in the first 2 months of this year, there was a January effect for the current manias, blockchain, crypto stocks, and cannabis stocks, but the resource stocks have either flatlined or trended lower. So this thing that we always fret about called the PDAC curse, which is the tendency for the resource juniors to decline after this the world's biggest mining conference in Toronto, that's probably not going to happen because there's no rise to decline from. The big hope everybody has is that, as soon as we work our way through this, this bubble mania and we get going into the sort of second half of the year, we're going to see the resource sector's turn come. But the subduedness comes from this concern that with policies being embraced by the Trump administration, such as possibly starting a trade war, which will be crippling for the global economy, that the resource sector, which has in effect been in a bear market since 2011, with 2016 looking more like a dead cat bounce, a mere respite, could never get its turn before the whole business cycle that started in 2009 grinds down as interest rates head higher, as they move to choke off inflation, and that we just won't get our turn. So this mood characterized conference. Maybe 24,000 delegates were present. The biggest was about 30,000 people back then around 2010, 2011, when basically the resource sector peaked. And this sort of subduedness is starting to wash over into the companies. When 2016 kicked off what looked like a turnaround, a fair bit of money went into a number of companies that raised a lot of exploration capital to some degree to rethink existing systems, such as the Windfall District in Quebec, where Osisko Mining is the poster child, where, we're tired of waiting for the price of gold to go up, so let's rethink this system, put a lot of drill holes into it based on this new theory, and show that this is bigger and better and actually works at the metal prices we have. But not all projects have delivered a spectacular upgrade in terms of better results, and the backers of these companies are starting to become unhappy. And we've seen this in a number of companies. Perhaps the earliest example was in 2016, when Don Robinson and Kathy Butella of East Main Resources, who'd run that company for over 10 years, raised and spent almost $40 million on the Eau Claire gold project in Quebec, and it still hadn't delivered a PEA. They got ousted by a cranky shareholder group. Claude Lamasson came in, raised another $10-20 million, delivered a resource estimate. It makes the project better, and supposedly it's now ready for a PEA, but the stock is at the lowest price, around 23 cents, since 2014, so no joy there. Another example was a Discovery Watch Junior that we had, Red Star, with its Unga project. A lot of expectations in 2016, good results, but deeper drilling last year failed to deliver the grades. The VP of Exploration is gone. Peter Ball was terminated a week or so ago, and one of the big shareholders, Jacques Valencourt, has had to step in as interim CEO to figure out what to do with this company. Another example was Bowfield Resources early last year when the windfall play was getting underway. And Jens Hansen, who'd been with that company, I think 20 years, all of a sudden, cranky shareholders kicked him out. The stock had a bit of a rally, but it's now also back to where it started at the beginning of the year. And this brings us to Colorado Resources. And this thing is, I think, going to become emblematic of what's going on. There is a deep frustration within the audience for this resource sector, but it's also linked to a forced passing of the torch by the old guard. These are the mining executives who are now in their 70s, who've been through multiple cycles. We are now in the longest bear cycle ever in the history of these juniors. They are seeing the chance for one last hurrah slip away from them as they contemplate the possibility that we descend back into a global recession and the resource sector simply fades away and dies. So it's turning into a bit of a battle royale between the new guard, a younger group of people in their 50s, 30s, 40s, who have time on their side, who can endure another 5-6 years of miserable bear market, and who are trying to assert their role with the old guard fighting back. In the case of Colorado, it's a Discovery Watch Junior because, it has the KSP project in the Golden Triangle, where it's done plenty of drilling. Early last year, the CEO, Adam Travis, managed to snag the Kanaskan Castle project. It's a small rectangular block associated with their existing bigger Kanaskan project. And at the time, it was not a big deal. Another company was getting out of that area, moving into other areas. He grabbed it on fairly easy terms. One of the chairman of the company, Larry Nagy, he has a shell company called Damara Gold. It used to be called Solomon Resources, was a long time ago a bottom fish pick of mine. But in the last decade, it's been pretty dead. It's undergone 2 10-for-1 rollbacks, hasn't accomplished much. And so Larry, who's got only, less than 300,000 disclosed shares of Colorado versus, say, almost 5 million shares for Adam Travis, he wanted to help out his Damara company along with its shareholders by optioning the project. So Adam was fine with that and said, okay, let's do this. And the negotiations dragged on, and then by May, Larry had to say, I can't do it. There's just not the market appetite, so we'll cancel that. And then along comes early July when GT Gold, whose Tatoga project is one of our Discovery Watch stories, started delivering very good high-grade gold-silver intersections, indicating a significant new discovery. The stock rocketed from 30, 40 cents to, I think, as high as $3 last year. And all of a sudden, this Kanaskan Castle property, which is to the west, on trend from the strike of the zones, the structures that control the Tatoga mineralization, all of a sudden this was a hot property, and Larry Nagy said, okay, let's revive these negotiations. Let's farm this out to Damara Gold, which is going to have about $500,000 in the treasury from selling the shares they got from blending off or merging off one of its existing assets. And at this point, though, Adam Travis says, yes, but now this play is hot. We have money. It's nice to have a property that has area play potential. We should not do this now, especially because it is a company related by directors. Better not to do that. So, I mean, that's when the relationship between the old guard and the new guard started to break down. And it came to a head in late November. Adam Travis capitulated, expressing misgivings. They announced a farm-out deal where Damara could earn 100% by spending $8 million and issuing shares to Colorado. Colorado then, in turn, could back in for 51% by spending another $8 million, which is, going to happen if you have a significant discovery on your hands. It was not a horrible deal, but the blowback from shareholders of Colorado was severe. And within several weeks, this deal had been canceled, and so this was a huge embarrassment for Larry Nagy. And but the relationship between him and Adam Travis, it could not be repaired. The genie was out of the bottle, and in late February, the board fired Adam Travis as CEO, brought in another party as a temporary CEO, and now we are seeing Adam Travis fight back. The annual meeting will be held on April 17th. He has already proposed a slate of directors, which are generally young person. There's young people in their 50s, 30s, 40s, and one person in his 60s. And this will come to a vote. They have Goldcorp as a 14% shareholder, and of course that's going to be the swing vote determining. Larry Nagy has yet to propose his slate of directors. So we have a showdown coming between a frustrated old guard watching their role in this junior resource sector slip away, fearing that we are heading into a extended bear market where the resource juniors do not get their turn late in the business cycle. And it's going to be a passing of the torch. I suspect the Adam Travis Group will prevail at the end of the day. The company has about $4 or $5 million left. It will return to the KSB and the Kanaskan area. GT Gold itself has been beat up in the market. It's at 50, 60 cents after last year's heights. They have money in the bank. They will be going back. And it's quite possible that all this gloom and doom, this wall of worry that this market is climbing, may actually pass, and the resource sector will flourish in the second half of this year. The general economy will not go into the garbage can, and we will get our turn. So this proxy battle is an interesting showdown as to whether or not a younger group of mining executives will prevail in the battle with the fading old guard.
We'll have more with Discovery Watch with John Kaiser right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with John Kaiser. John, Scandium International published a news release during PDAC that sounds like the company is moving into the aluminum alloy business. Are they giving up on the Ningen discovery in New South Wales?
Well, during the PDAC, I wandered over into the trade show section to visit the Australia Pavilion, and each of the Australian states had a section where they had maps and brochures and other stuff to promote the mining sector in their state. And I picked up a nice map from New South Wales, and it was all full of labels and arrows pointing to advanced and important exploration projects in New South Wales. And there was Flemington, there was the Sunrise Syerston project. There were all the ones except the one for which they actually granted a mining lease. Ningen was conspicuous by its absence. So I'm not surprised that a market might think, well, maybe Scandium International is moving away from being a miner to simply being an alloy producer. What the news release said is that the company is moving beyond bench scale production of aluminum scandium master alloy to pilot scale. And pilot scale is only 20 kilograms of master alloy. Master alloy is 2% scandium and 98% aluminum. And scandium itself comes as a white powder called scandium oxide, which gets blended into molten aluminum to create a master alloy, and then that gets sold on to fabricators who then remelt it and blend it in with other aluminum alloys or even just plain aluminum to get the particular percent of scandium that they need. And of course what they want is the lowest percent, because scandium is $2,000 a kilo for oxide, and aluminum itself is just under $1 per pound for ordinary aluminum. So getting it down to that particular rate where you still have the properties but not the high cost, this is the goal that all the fabricators want. Now, the reason that Scandium International has emphasized moving into master alloy production is that they have realized that there are only a handful of serious master alloy producers in the world, and they are functioning as a type of bottleneck. The problem with scandium has always been the chicken and egg problem, in that end users do not really want to commit to using aluminum scandium alloy unless they are guaranteed a large enough supply of scandium to roll out their production line. And of course, at the producer end, until you have the offtakes lined up, it's difficult to raise the capital cost to build your mine and deliver the product, especially given that this type of material has never been processed on a commercial scale. Scandium right now is produced as a byproduct from operations such as the Bayan Obo rare earth mine, titanium dioxide waste stream stripping operations, and in situ leaching operations of uranium in Russia, where Rusal, the big aluminum company, is also working on recovering it as a byproduct from its the red mud that's produced when it converts bauxite into alumina. But the scandium oxide, similar to like with tungsten and rare earths and antimony, which is generally sold as a concentrate to middlemen, the middlemen have no incentive to really develop the market because they don't control the supply from the producers, and that's the chicken and the egg problem. And yet they function as a go-between. So what Scandium International announced is that it is getting serious about doing an end run around the big intermediaries such as KBM Philips, a private company based in the Netherlands, and AMG Advanced Metallurgical Technologies, which is a Euronext listed company headed by Heinz Schimmelbusch of Metallgesellschaft and Taminco fame, which does about $1 billion revenue and is specialized in critical materials, and has an operation in Pennsylvania that produces various aluminum alloys, probably $50 million worth a year. But again, since they can't source the product except from sources in China, which are very unreliable, they don't really have much incentive to develop the off-take market. And one of the things that was interesting about the PDAC booth Scandium International had was that they had all kinds of examples of aluminum scandium alloy material that they had made. They had armor plate about 3/4 inch thick, which can stop a 50 caliber bullet and appears to be of great interest to certain defense departments who want to clad their vehicles in something that isn't going to stop a missile, but is going to stop a high-powered bullet, such as a 50 caliber one fired from a machine gun. And they also had little strips showing that they are making this product. In fact, they were handing it out as souvenirs instead of some plastic pen. They were handing out little 8-inch by 3/4 inch, couple millimeter thick strips so that everybody could see what 0.1% aluminum scandium alloy looks like, and with a nice little shiny edge, put it outside and see if it all turns gray and blotchy like aluminum normally does, but not when it has scandium enrichment in it. And what was really interesting is they had these colored tabs where they had baked the color, blue colors, bright blue colors, different colors into it, and you could not scratch this. And you start thinking, gee, that would be really good to have for perhaps some phone case, or even maybe have the outside of a car made of an aluminum scandium alloy with this type of paint, that nobody's going to be able to key your car because they park too close to you and are annoyed that they can't easily get into their car. So they've demonstrated, they put out this news release, we are moving into this business. We can deal directly with fabricators. We're going to produce a lot of sample material. They'll run several batches of this, so they'll probably have about a couple tons of aluminum scandium alloy material they'll be able to ship around. And of course, the sort of gloomy news for the shareholders is that, well, it looks like it may take another 4 to 6 months before we reach that critical mass where we have offtake agreements. Management seems to be of the view that it is working on offtake deals. When they announce these, the market will gap up. Skeptics such as myself say, well, you know, that's not how the financial sector really works. You need to have a trend, an uptrend. If you want to finance at 60, 80 cents, you can't be at 18 cents and suddenly announce a wonderful news and expect the stock to gap up. But the confidence I'm seeing from them suggests that maybe they are dealing with parties that completely bypass the traditional sources of financing. The other thing that was in the news release that made people start wondering if in fact they're going to become an alloy producer is the company filed patents on both master alloy production and on adding scandium oxide powder directly into aluminum melt to achieve the particular grade or percentage of scandium that you want for your end product. And this has people thinking, oh, they might spin off the alloy business from the mining business. But in reality, what the company is doing is a preemptive move to prevent one of these middlemen, whom in essence they are cutting out, from suddenly filing their own patent for proprietary knowledge about how to do this, and then sort of saying, no, you have to come through us. They have in essence created a public good, which will be available for everybody to see when the patent is approved. And of course, China will look at this, and they have zero respect for intellectual property. And the way everything's headed anyways, with cyber hacking, there are going to be no secrets. And if Trump continues on with his goal of fragmenting the globalized economy into much smaller trading zones that just deal with each other, you're going to see this information leak out into the system, and people in different jurisdictions are not going to pay attention to any court rulings. That is the essence of fragmenting, creating trade wars, and so on. And this is going to be good for SCY because it controls production. If it gets Ningen going, it'll have 35, 40 tons a year of scandium oxide. It can scale that probably 3-4 times bigger. It has the Honey Bugle project, and it even has the Kiviniemi project in Finland as also a potential source. So by cutting out the middlemen and being able to deal directly with the end users, it is in essence setting itself up with a near monopoly to mine and market scandium. And of course others will come on stream afterwards, and we'll see this go way beyond 10, 20 tons, eventually to 500,000 tons per year.
We'll have more with Discovery Watch with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Kaiser. John, Verde Agrotech jumped last week after announcing it will build a 45-ton-per-hour production facility at its Super Green Sand project in Brazil. How significant is that news?
The news is fairly significant in that last year they published a PEA for a scenario where they start very slow mining the Verdeche slate on a small scale and using the cash flow from selling what they call super green sand to fund gradual expansion of production in response to increasing acceptance by the market of this product as an alternative to conventional potassium chloride. So what they announced was that they had a deal for $500,000 US to build this facility, and it's nothing fancy. 10 years ago, when this all started in 2008, 2009, everything was going to involve complex rotary kiln stuff, a lot of energy inputs, a lot of machinery and equipment when they're going to make thermal potash, and then they were going to actually convert this Verdeche slate material into conventional potassium chloride, and that was an even bigger chemical plant scenario. And then they reverted back to making thermal potash, which still involved heat treating the material and adding in various stuff. And then eventually they realized that by simply grinding up this material fine and spreading it into soils such as those that exist in Brazil, the complex interaction between root secretions and microorganisms actually broke apart this potassium silicate, which normally does not allow the potassium to become available for uptake by crops. And it's interesting, green sand, there are deposits in the United States, used to be in New Jersey, and at the end of the 18th or 19th century it was used, and that became less important when it was figured out how to make potassium chloride from the sylvanite deposits such as those in Saskatchewan and other parts of the United States, and we shifted more to chemical potash as a source of this particular fertilizer. But the green sand operation continued in New Jersey because organic farmers could use it and claim organic. But that got shut down a few years ago. Organic farmers have had to rely on a similar product from Russia, but they've been unhappy about it. It's considerably lower grade, 3% to 4% of potassium in it compared to the 9 to 11% of these billions of tons of Verdeche slate in Brazil. So Verde Agrotech has developed a two-track strategy. It builds a simple crushing facility, and it develops quarries from multiple locations. Doesn't even need to blast the material. It can simply scrape it up, truck it to a centralized facility where it gets ground up, and then it gets bagged into two types of bags. A 20-kilogram bag that's all labeled and gets shipped to North America for marketing through Amazon to these sort of boutique organic farmers and this is kind of fairly small scale, but at the same time they create 1-ton bags which are going to go to the Brazilian farmers who will be spreading this onto their fields in lieu of conventional potassium chloride applications. And this has to start small because the farmers will want to see that this works. And if they get this, they believe they will have this facility done. 45 tons per hour translates into about 450 tons per day on a 10-hour day, eventually 1,000 tons per day. They right now only have a permit for 20,000 tons per year, but in 2015 they filed an application for one that's going to be about 250,000 tons. They think they will have that by the end of the second quarter of this year. They're not going to be at 300,000 tons per year for some time, but they believe they'll have all that there so that they can keep scaling this up bigger and bigger and start producing this stuff, start shipping it, and gradually build a market. So the market for the stock reacted positively because now this big game plan of gradually developing the offtake market by producing and delivering this at a relatively modest initial capex, it's finally underway. And so by July, we'll be we'll be in the mode of waiting for reports how much of this stuff has sold, and not so much what the first-time sales are, but the repeat orders. What are the repeat orders that the company is getting? And then, of course, when these farmers hear from each other that this stuff actually works and is much better than conventional potassium chloride and priced slightly cheaper, then you'll see rapid adoption, and that's where they start pushing towards that 250,000 limit. And, of course, they're working on another application to be able to produce 600,000 tons per year. And eventually, they're talking about producing 10 to 20 million tons per year, primarily for the Brazilian market because of the shipping costs involved. And that's extremely large scale, exploiting these deposits that they control that are about over 1 billion tons of this 9 to 11% super green sand material, 2 to 3 times higher grade than similar glauconite deposits elsewhere in the world.
John, thank you for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.